Hey, Steve here. I want to talk to you today about a newer system that we have did some research on and come across, and we'll call this one the first and last trading day of the month system. I'm kind of combining them. They are a little bit different, and I want to put them all in one particular video. But they're both kind of combined in the sense of the results and so forth. Individually, they do win roughly about the same percentage, 70 to 71% historically over the last 5-6 years. It's not going to trade a lot. It only trades on the last trading day of the month and the first trading day of the month. So each system would only have a maximum of 12 trades each, so 24 trades in a year. But on average, because of the rules and so forth, you're going to get between 8 and 13 trades a year on this particular system. So I'm going to break down the first trading day of the month first, walk you through that, and then in the second portion of the video we'll go into the other system as well. So let's get to it. This is a system that we're actually going to look at the Dow Jones Index, as far as the indicator per se of how this trade actually trades. But we're actually going to be trading the S&P. So we're going to look at the Dow, but we're going to trade the S&P. So it's a little different in that regard, but again, very simple system, and we'll walk you through it here. So first things first, we're going to look at the first trading day of the month, and this is a long-only system. So on the first trading day of the month, you are only going to place a buy trade. So there is no option for a sell trade. It's strictly only a buy trade for this particular system. So first trading day of the month is a long system. What you do, and the rules are, on the last trading day of the month, not calendar day, but the last trading day of the month, you check to see where the Dow closed for the day, the closing price for the last trading day of the month. And again, this could be any day of the week, could be a Monday through Friday, doesn't matter. So we check that number, and I'm going to walk you through a trade here in just a bit. But we check that number, see what the closing price is for the last trading day of the month. Next, if the closing price was lower than the high of the Dow 3 days back, you go long for the first trading day of the month. So I'm going to walk you through a trade so you can kind of see it on a chart and exactly what I'm talking about here. So I'm going to go just to the last one we did, which was October 1st. Again, the first rule is to check where the Dow closed on the last trading day of the month, and hopefully you can see this. Here is the last. Let me see if I can pull this over. Here you go. This is the last trading day of the month, which was September 30th, and you can see it closed at 15,129. So that's the last trading day of the month. So now we know the closing price, 15,129. Now we count 3 days back from that. This would be, you don't count the actual last day of the month. You count the day before that, which would be number 1, number 2, and number 3. The only bar that really matters is the third bar. We don't care where the this first bar or the second bar was. We only care about this third bar here. So again, what the rule says is we want to check to see where the high of that third bar was, and as you can see, it was 15,372. So the close for the last trading day of the month was 15,129. The high 3 bars before that was 15,372. So back at our rules, again, we have the close, which was 15,129. If the closing price is lower than the high 3 days back, and again the high was 15,372, so that's the case, we would go long the next trading day, which would be the first trading day of the month, which would have been October 1st. And again, we're going to be buying the, you would enter at the open, which is 9:30 a.m. Eastern on the next trading day, the first trading day of the month, and we're actually going to be buying the S&P 500. And it's a whole day trade, so it's, you buy it right away at 9:30, you hold it for the rest of the day. Now here's the result of that particular purchase. Again, this is October 1st. of the S&P. This is actually the S&P index. As you can see, it was a big up day, and it was a winner for us for this particular trade. So again, just to recap, the first trading day of the month is only a long trade. You're only going to take buy trades. So if these two particular rules do not mesh, you're not going to have a trade. You're not going to go short or anything like that. You check the Dow, see where it is the last trading day of the month. Again, it's the last trading day of the month, not the last calendar day. It could be the last calendar day, but not necessarily always. So some months might the last trading day of the month might fall on the 28th or the 29th, etc. So keep that in mind, and it doesn't matter if it's the Monday, Tuesday, Wednesday, Thursday, Friday. But you check where the Dow is, and then if the Dow is lower than it was, then it was 3 bars back for the high, you would go long, and you would buy the S&P for the next day, and hold it till the end of the day. And like I said, this particular system has won about 70% of the time over the last 5-6 years, and does pretty well. So let's move on to the other system. All right, so that was the system about trading on the first trading day of the month. This is a system about trading on the last trading day of the month. So with this one, it's only a short only system. So this is only trading sell positions. You're going to get a little less trades on this. Overall, over the course of time, you'll probably get for every 3 of the long trades, you'll probably get 2 of these particular trades on the short side. But in this particular case, again, it's the same thing. You're looking at Dow and you're trading the S&P. So on the trading day before the last trading day of the month, so again, we're looking at we're going to be wanting to trade on the last trading day of the month. So you're going to want to look for the day before the last trading day of the month. See where the Dow index closed. And again, this could be any day, Monday through Friday. And if the closing price is higher than the high of the Dow from the day before, or one day back, then we go short the next trading day, which would be the last trading day of the month. Again, you would enter at 9:30. You'd hold for the rest of the day, and it would be a sell position. So let me walk you through a couple of these particular examples. So I'm going to take the last couple of trades we've had for this particular short system. Again, this was June of 2013. The last trading day of June 2013 was June 28th. So the day before June 28th, we would take a look at where the Dow is. And in this particular chart is the Dow on June 27th. So you can see the close of the Dow was at 15,024. And what the system says is you check to see where the Dow closed on the day on this particular day, which was 15,024. And if it's higher than the high of the previous bar, so higher than this bar here, if this close is higher than the high of this bar, the high of this bar was 14,938. So obviously it is the case. You would sell or short the S&P for June 28th. So let me move over to the S&P a minute, just so you can see that. And you can see that this is the S&P for June 28th. As you can see, it's a down day and a nice winner for this particular system. Here is the end of February trade for this. Again, here's the second to last trading day of the month, which is February 27th. You check to see where this closed, which was 14,075. You can see it's much higher than the high for the previous day, and you would go short the next day with the S&P 500. So let's take a look at that. And that is right here. this particular day. As you can see, it was a down day. Didn't win by a whole lot, won by a point or two, but it was a profitable trade. So again, those are the rules for the particular systems. Again, you'd be trading the last trading day of the month, which would be a short only trade. Looking at the Dow to see if the rules work. Trading the S&P. The trade is from 9:30 till the end of the day, which is 4 o'clock. And the other trade is the first trade of the week, or excuse me, first trade of the month, and that is a long only trade, again based on the rules. And both of these systems have produced combined around 70-71% winning rate over the course of 5-6 years. So, and again, you're going to average between 8 to 13 trades in a year. Currently, I believe 2013, we're at 10 or 11 trades as of October 17th when I'm doing this video. So that's on pace for that as well, and we'll see what happens going forward. But neat little system. Again, you can schedule them only the first and last trading days of the month, so you don't have to watch the markets all day for this particular thing. Just have to be ready on those two particular days for potential trades, and they offer historical good win rates. So we'll see if that continues. Hopefully this was helpful. If you do have any questions, feel free to contact me, and I wish you the best. See ya.